Welcome to the Hectare Trading Grain Market Update for the 10th of July, 2026. This week, our benchmark spot price for feed wheat is £185, unchanged from last week. The collapse of the US-Iran ceasefire has renewed uncertainty for farmers, sparking fears of vessel disruptions in the Strait of Hormuz and sending crude oil prices higher. While the early harvest in Ukraine and Romania has started with high yields, rains during the harvest window may degrade grain quality. Consequently, an increased proportion of the Black Sea wheat crop may be categorised as feed quality. London feed wheat futures started the week strongly, the November contract climbing to £180.5 at Monday's close. After inching forward to £180.50 on Tuesday, the contract pulled back to £180 on Wednesday, before finishing Thursday at £180.50. On Hectare Trading, feed wheat received bids up to £191 for May 27th movement. Farmers across the country have been forward selling feed wheat for movement from August this year, though, to the start of 2028. Our benchmark price for milling wheat is £195, £2 down on last week. One of France's largest grain processors has forecast that the French soft wheat crop will be noticeably smaller this year, 31.5 to 32 million tonnes due to drought and heat in western regions. However, early harvest results indicate that the milling quality of the French crop is excellent, suggesting that UK growers will face robust competition from high-quality European milling wheat. Meanwhile, heavy rainfall has affected the quality of China's domestic wheat harvest, which could increase Asian import demand for milling wheat throughout the season. Since closing at €209.50 on the 24th of June, the September Paris milling wheat contract gave up €8 to last week's close at €201.50. A brighter start to this week saw the contract reach €204.75, easing slightly on Wednesday, then finishing Thursday at €205. Our benchmark price for feed barley is unchanged this week at £157. The early winter barley harvest in Poland has disappointed farmers with average yields of 4.5 to 5 tonnes per hectare, while some drought-affected fields are producing only around 3 tonnes per hectare. In the UK, the most immediate threat to feed barley prices comes from widespread quality issues in the malting barley sector caused by the European heatwave. High nitrogen levels and poor grain retention are causing a wave of rejections at the stores, so that a massive bottleneck of downgraded malting barley is being dumped into the feed market. Farmers in the Midlands have received bids up to £176 for feed barley on Hectare Trading for May 27th movement, while we've also seen forward selling to lock in prices in East Anglia and Northumberland and Scottish borders. Our benchmark price for oilseed rape is £425, down £1 on last week. Canada shocked the market by estimating a record 23.4 million planted acres of canola for the 26-27 season. However, severe weather events are already threatening this potential record crop, and there are now fears that up to 5% of the planted area could be abandoned. Meanwhile, the spike in crude oil prices has caused another sharp rally in Paris rapeseed futures. The August contract climbed €8.75 to €512.75 on Monday, and then to €523 by Wednesday's close. On Thursday, the contract eased back to €519. On Hectare Trading, we've seen bids up to £439 in the Midlands for oilseed rape to move this August. If you've signed up to Hectare Trading, you can access the latest market insights. By filtering on region, you can see our regional benchmark price estimates, our market analysis, the latest prices that have been offered to farmers, as well as market commentary, futures, and access to wider market news.